All right. Alrighty, so let's get a rolling. So what do you do when you buy something and it drops real big? Now, I bought some IBM on Monday. Did I expect this to happen today? No, we're going to go into it in a second and explain what do you do when a stock went down. It went up, it went down. It jumped up here, it dropped here. It jumped up here and it dropped here. Well, that's what stocks do. Stocks go up, stocks go down. Now, we never really know how much they're going to go up or down. We just know here's the high, here's the low, here's where it was, here's where it is. Look at the motion. Up, down, up, down, up, down. Big down here. What happened here? Now, like I said, I jumped in on Monday. Let me squeeze in and show you a little bit closer so you get an idea. Okay, so that's the 1 year chart. That's the last year. Right down there. That's the low of the year. And that was 181.81. Well, the high of the year was just a few ago. What is that right there? That's a big drop. Now, what happened? Well, apparently they didn't like the earnings, so tell me what AM is. I have no idea. Your sign. I'm glad you feel something for it. Looks good. All right, thank you. All right, so anyway, I jumped in on Monday, which was the 21st. Thursday was higher, Friday was higher, and then Monday opened higher. That's my cue to jump in. So I jumped in on the decrease down to 260. We even hit down into the 250 area today. Well, that's a big drop. So what am I going to do? Absolutely 2 cents when I sold to 8. Because anytime we had today, this it drops, it bounces back again. So it went all the way down to the 2. Let's find out exactly how low it went to. 2. So she all the way down. Now I'm in at 285. How do you think I feel? Well, this is what I'm looking at. Next week, now I'm not going to sell 285s next week. It'll look like. The next week's 285 is only selling the 67s or the 270s. I can still pick up a buck, which is 0.5%. And 0.5% every week is over 26%. If you have the ability, okay? If you have the ability, you can dollar cost average. Okay, so I'm in at 285. Now it's at 260. I can meet somewhere in the middle, probably 272, if I buy the same amount. Close the gap a little bit. Okay, but it is going to close. Eventually, it is going to go back up. After all, it's IBM. It's been around for a long time. They ain't going anywhere. And they're into quantum computing, which is big nowadays. But I don't follow the wave of interest. All right, we're going to get to Comcast in a little bit, Rob. Oh, let me go back to some of these questions. What do we have here? Let's stop right about there. Do you work for ESPN? No, I don't. Where do you get that question from? You're welcome, thank Big A. And Cam, what's Cassava? I have no idea. Give me the ticker. Cool stuff by Jake. All right, thank you. Cool stuff by Jake. Teammates. If he's learning dog, but you don't want to lose a lot of money. I'm not quite what you mean by that. That's not really. My king, fully. I have no idea what that means. Cool stuff by Jake. Or is it more involved with talking to a person at a company? Okay, cool stuff by Jake. I'm not 100% sure what you're talking about. Because the two questions I'm looking, they don't seem to go together. Or is it more involved with talking to for it? It looks good. I'm not sure what that means. But, it is what it is. Okay, chat. Hello. All right. So, Dean, subject intro. Oh, Dean, good evening. Andy, dang, I'm late. Missed IBM. No, we're actually just getting to IBM. So, there's the big drop for IBM. Now, I get no problem whatsoever. Strictly depending on what it's going to do tomorrow and then what it's going to market opens on Monday, because I'll have a good idea of what's happening tomorrow. Because let's face it, it ain't going to rise way up here. Now it could, but I seriously doubt it. Is right. So drop. So next week, depending on what it does tomorrow and what it does on Monday morning, well, Monday morning after market opens, I'll see exactly which one of these, whether it is $1.25 a share, doing the 167s, which is right about here, okay, or if I do the 170, the 270s, which is right here, or if I do the 275s right here, and a fixed income. Now, I'm not old enough to get Social Security yet. Next year, okay, but this year, I got to figure out where my money's coming from. Where can I put it to get the biggest bang for my buck? Where am I going to be safe? Where am I going to have a consistent profit? These are important questions for me. So, that being said, let me introduce you. All right, let's wake up. All right, let me introduce myself. My name is James. This is Dividend Stock Talk. How it came about? Well, 15 or so years ago, my 9-year-old daughter jumped, "Can you teach me?" Out of all the things for a 9-year-old, no, it's like, "Daddy, can you buy me this? Daddy, can you get this? Daddy, can we go here? Daddy, can I have..." No, "Daddy, can you teach me how to trade stocks?" Most adults don't get it. Most adults stay away from it. But here's a 9-year-old little girl who wants to learn how to do it. Okay? So, with that being said, I'm going to share with you what I share with my 9-year-old daughter. Now, I didn't tell her very much that very a 9-year-old, when most adults don't get it. Well, first of all, number one, it had to be simple. I didn't want her losing. I wanted her to be consistently profitable, consistently winning, and then no way for her to lose. That fifth one always gets everybody. What do you mean, no way to lose? For over 140 years. 140 years. I seriously think that Coca-Cola is going to, oh, you know what? Let's just make baskets. No more electricity. No more appliances. Let's make weaving baskets. No, have two options. Option number one is you can go and look at 10, 20, 30 years of corporate reports, annual, quarterly reports, whatever. Or go straight to the dividends, because a dividend is a portion of the company's profits they give back to the investors. Let me give you a brief history lesson. In the late 1590s, a bunch of businessmen got together and said, "Hey, we want to create the biggest company the world has ever seen." So they literally went door to door, knocking on doors saying, "Hey, have I got a deal for you?" To the average person, the peasants, the lower. This is the first time in history that the average person could invest their money. So this was the deal. You invest in our company, our venture, East Asia Company. That company ran for 198 years. 100, that's just shy of 200 years. They averaged 8 years. The only reason they fought is, guess, greed and corruption, power and money to take over. Just take a look at it. Greed and corruption. I probably shouldn't say that too loud. Simple, safe, predictable, consistent, no way to lose. Okay. With those, came up with 5 rules. They're simple. So simple. Get this. They are so simple, a 9-year-old can understand them perfectly. You ready? Here we go. Rule number 1. If it ain't on the list, don't even bother looking at it. Let me simplify it for you guys. If you don't like the stock, if you don't want to hold on to it, you don't want to buy it, don't. Well, the list consists of the top companies, because I only wanted to invest in companies that were consistently profitable. 50 years, that's 5 decades of consistently increasing their dividends. Dividend aristocrats, 25 years of consistently increasing as the aristocrats. I mean, look at the aristocrats, champions. Yeah, so the champions have 25 years worth of dividend increases, but some of the rules are a little bit less stringent. List of 10 to 24 years of consistently increasing their profits. Then for the fun of it, we're going to throw on Warren Buffett's list. Invest your money into a company that's not consistently profitable. Now, I understand the new companies, they have tremendous growth potential. I understand that. I'm 61. that doesn't appeal to me much now as it used to. Okay, when I was in my 30s and 40s, yeah, potential was great, wonderful. Well, now that I don't have an income anymore and my investment has to pay my bills, well, I'm a little bit more picky on what ones I want. And those are companies that are consistently profitable for at least 2 decades. That's 20 years. Now, you might think that's a lot. Well, that's a very small amount. Now, we usually check once a week to see how many stocks, because every week they add more companies. Last week, this week it was 10,236, something like that. 10,236 different companies that we could invest in. So how do you choose which ones are right for you? What I want safe, consistent 1% every single week. That's what I want. Now, one, it doesn't sound like a lot. It's not. Dropped. I didn't panic. Most people would. Well, I wouldn't, because I'm playing the long game. So I sold the 285s this week. Great. I got over 2%. Wonderful. So next week I don't have to get so much. But this week, if I sell the two 6750s, I'm picking up 20% per year. Okay? 0.5% per week is at least 25% per year. Well, I can deal very well with 25%. Not as much as 50%, but still. All right? Needless to say, I didn't panic. I'm just going to see what happens. You don't need to see all that stuff. All right, there we go. All right, so that being go. That being said, we're just going to keep our tomorrow and Monday and see what happens. Because I have no intention whatsoever. I told you that. 5 rules. Rule number 1: if it's not on the list, don't buy it. Well, I just told you the list. Dividend Kings, Aristocrats, Dividend Champions, Defenders, Warren Buffett's list. That's the 5. That's number 1. If it's not on the list, no, don't even bother. Rule number 2: never sell at a loss. It defeats the whole purpose. We're not here to give money away. Never buy something you're not willing to hold on to the day you die. I get no problem holding on to IBM. None whatsoever. Rule number here, higher and higher. Now, I normally do not invest into capital growth stocks because you can't tell when they're going to move. Now, the nice thing about dividend stock, an unknown reason, means it either dropped or it jumped for a reason that we don't know. Or 2, a known reason, which we know why it moved. We knew something was coming. Okay? So let me explain the difference between the two. An unknown reason, the Exxon Valdez crashed in the Northwest, spilled oil all over the place. Exxon stock dropped. It spilled crap all over the place. The train stock dropped. Okay? Stocks drop when something catastrophic happens that nobody planned. What else? Pop up? Some say the CIA know when it's going to pop up, but the average person doesn't know. I like to get into those conspiracies every once in a while. Because you know what really sucks about conspiracies? Because they lied to our faces, and then we found out they were actually lying. And okay, don't get me started. So, known reasons. A known reason. Dividends. We know when they're coming up. They're on the calendar. As a matter of fact, go right here. Okay? It shows you what else you can set your clock by. On a calendar. So what do? Well, you can do whatever you want, but this is what I do. I buy the stock just before they're going to pay a dividend, or they have earnings, or anything that they can plan, that you can write on a calendar, that you can put in your Rolodex, your reminder. Say, hey, PP&G has their dividend coming up. Well, let's buy some. Because here's the thing about dividend stocks, especially the boring ones. You know, the ones that barely move for the EX date. Okay, so if Johnson & Johnson right here has its dividend August 26th, which is next month, if I want to collect that dividend, I have to buy that stock before that date. Okay, because there's 4 dates to remember anytime you're talking about dividend stocks. Number 1 is the announcement date. Hey everybody, this is James from Dividend Stock Talk. We had a great year. We made so much money. This is how you're going to get yours. It's the announcement date. That's what I tell the public. This is what we made. This is what you're going to get. the announcement date. Date number 2 is called the EX dividend date, represented by these little green dots. That's the last day the stock trades. For the dividend date, capture the dividend, then you sell it. Then you go grab another one. And you do the same thing. You buy it, get the dividend, then you sell it. And you just keep moving on. Because every single week, every single day just about, there's a company paying out a dividend. As a matter of fact, look at this. Let's go this way and let's do that. There you go. See them all? Whole bunch here, whole bunch here. Now, it doesn't look like there's any here, but they couldn't fit them because there's 33 here, 25 there, 29 here, 47 there. Only one that day. So if you want to do dividend capturing, hey, that's EX dividend calendar. And a whole bunch of them will pop up. This one is included in the trading platform that I use. Now the trading platform, if you knew, wait a minute, there's 2 more dates. Remember I told you those 4 dates? Announcement date, EX dividend date. Third date would be the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, well, that's the payment date. That's when you get your money. 4 dates. Announcement date, EX dividend date, date of record. So think about this. If you knew a stock was going to move at a certain time, what would you do with that information? Well, there are so many different trading strategies. Which one would you do? Now, most people say, I'd buy the stock. That's the stupidest thing to do. One of the stupidest. Before you can make a profit. There is a trading strategy where the stock doesn't have to move and you can make a profit. Because stocks go in 3 different directions. Okay? Up, down, and then just nowhere. No, they call it sideways. Because if she stays the same, I'm getting a profit. If she goes up, I'm getting a profit. If it comes down a little bit, then it's a little bit different. Okay? But basically, if you can cover 2 of the 3 bases, well, that's a little bit more of an advantage now, isn't it? So, trading strategy called the covered call, where the stock doesn't have to move at all in order for you to make a profit. Don't ever buy a stock unless the chart is telling the chart's going to tell you where's the high of the year, where's the low of the year, and it gives you a rough idea. The path through the woods, the flow of the river, whatever you want to call it, whatever analogy you want to call it, whatever. It gives you patterns. Up, down, up, down, up, down, up, down, up, down. So where's it going next? Well, it's in an upward trend, slow. That's over the whole year. So if you take a look at the whole year, yeah, it's slowly going up. So what do they all have in common? Well, wait a second. Nope, there's a dividend there. Oh, announcement date. Because I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. It just doesn't make any sense to me. It's simple. As many, I'm thinking of a good word here. Find as many perks or as many things you can odds and probabilities. Find as many odds and probabilities you can stack in your favor. Well, number 1, only companies that are consistently profitable for over 20 years. Well, that's a good one. Number 2, a trading strategy where you make money and the stock doesn't have to move at all. Number 3, knowing when the stock is going to move by the calendar, because the calendar tells you exactly when they're paying their dividend. And if the stock goes up right around the dividend and you know it's going to go up, well, that's another little tidbit of information in your favor. So what we're going to do tonight is we're going to actually go through a few samples. I'm going to take a look at some stocks you guys like. Advice. The little advice I give is, it's generic. Like if you're worried about taxes, talk to a tax. Not an accountant, not a bookkeeper, a tax strategist or tax planner. They'll help you avoid taxes legally. Okay, again, second thing I'll tell you will know once you start paper trading, it's like Monopoly. 4 greenhouses, 1 red hotel. 4 greenhouses, 1 red hotel. That's how you play the game. Well, the stock market, you buy it at the right time. Buy it low, sell it high. Buy it low, sell it high. Buy it low, sell it high. That's the way the game goes. Never once have I ever heard anyone say, hey, let's buy it high and wait for it to go higher. Yeah, no. I've never heard that. Nobody's ever said it to me. Now, a lot of you people in the audience, if a company's at an all-time high, why the hell would you want to buy it? unless you knew something that nobody else knew. You know, hey, it's supposed to go higher. I know this because whatever reason it is. Not because I think. No. I don't play that game. I'm 61. I don't have the luxury of being wrong. Okay, but however, I'm not saying I'm never wrong. I think I lost 4 times this year. Okay, now, just let's put it in context. I got 7 accounts. I share 3 of them publicly. Okay, so where, you know? But here's the thing. 7 accounts, and I trade every single week. Every single one of my accounts has a dividend stock in it. In every single account, I trade an option against it every single week. So we are in, I believe it's week number 30 for the year. We're already halfway past the year. Okay, the year is already halfway past. We are in deep into the third. No, wait a minute. The first week. No, that ain't it. 4th week, 1st month, 3rd quarter. Also known as week 30, 31, somewhere in that area. But out of all that trading, I've only lost 4 times. Okay, you may think other thing. When I say never sell at a loss, well, you're going to lose the most money hitting the wrong button. When I say never sell at a loss, what do I mean? Well, your stocks can go up and they can go down until you agree to sell it for less than you paid for it. Well, that's on you. Because IBM, yeah, it dropped down to 260, but the low of the year is at 181. Why do I care that it's at 260? We are going to go through some live trades, so I'll actually show you exactly how I do them. And as we progress, ask questions you like. Okay, now, I'm going to apologize now because when I first started, I can't keep track of all the questions, and I want to apologize for that ahead of time. All right, so if I don't get to your question, I'm terribly sorry. I do this every night, except for Friday nights. Now, 7 days a week, 365 days. I missed 6 last year. Okay, now, 1, I was sick as a dog, like last night morning. So that's kind of, self-explanatory. And then the others, over St. Petersburg. No water, no electric, no internet. So, there you go. I missed 6 days last year. And I did every single night of the year, except for 6. So what is that? 359? 358? Something like that. 358 straight days. So anyway, let's got some of these to take a look at. That's IBM. I love when it drops like that. Let's go back to where we were. Right there. And there. Now, I'm like, quote, a lazy trader. Somebody told me. One of the people actually a couple of people in my trading group said it was something about the earnings. Okay, well, they didn't like the earnings. Well, why did it up so much? Here's the thing. There's 5 numbers you got to remember, and then the range. Okay, let me explain. See, there's 4 numbers when you're looking at a candlestick. Okay, you have the top of the wick is the high of the day. The bottom of the wick is the low of the day. On a red day, the top horizontal line, that's the opening price. The shares are traded that day. Okay, so those 5 numbers. Only one of them is controlled by one person, and that's the market maker. And the power that the market maker has is unbelievable. Take a look at what he did today. Okay, either late last night or first thing this morning, he gets an email, a text, something, and it has 5 simple words on it. Target, well, I'm going to drop it down a little bit. That's the power of the market maker. He gets one piece of paper, one email, one text, like that. So, what's too low? And the volume, well, we decide if we want to buy it, and we decide if we want to sell it. That's what we do. We create 4 numbers. But it is what it is. All right, so that being said, let's go on to the next one. I do have some IBM. Is what it is. All right, so questions. Are you using the same program to see the more about person company? Dang, I'm late, Mr. IBM. No, you didn't. Dean, okay. Johnny Dill, business is best done in person. Straight in the eyes, shake hands, break bread, all that kind of nice, neat, fun stuff. Yeah, DJ Speed, I do manage portfolios. How many different stocks do you hold at a time? Well, I told you I got 7 different accounts. Now, a lot of the same stocks are in all the different accounts because it just makes sense. But each account has anywhere between 5 and 8 different positions. Johnny Deere. Oh, anytime I touch the screen, they disappear. Right here. Johnny Deere manufacturing facilities will produce their own power to increase the power grid. That's not a question, Johnny, but thank you for that. Joe, for tomorrow, 8-1, ABV. 8-1. ABV. ABBV. Anytime I look at a chart, I'm looking for things. No, I'm going to show them to you now. 5. I like the number 5. Ugh, stomach's still not agreeing with me. It was that stomach flu? Okay. Like a lot of people are getting it, from what I understand. So, here we go. I'm looking for 5 things anytime I look at any chart. Now, to look at a chart should take you 3 to 4 seconds. Now, some of you probably, hey, that was what, 2 seconds? High, low, what is this? It's not at the high. It's not. Now, we are going a little bit deeper, but at first, high, low, where was it? Where is it? What direction is it going? All right? Next, we want to look at the numbers. Now, when I explain, remember rule number 5? Make sure the numbers work. Oh, wait a minute, I didn't get to that one. Rule 1 was never buy something. Oh, yes, I forgot all 5 rules. Rule 1, never buy something not on the list. Rule 2, never sell a loss. Rule 3, make sure the company's consistently profitable. Rule 4, weekly options only. No weekly options, no thank you. I'm looking for weekly cash flow. I can't get weekly cash flow from a company that doesn't have options, and I can't get it from a company that only has monthly options. Weekly options only, that's for 4. And rule number 5, make sure the numbers work. This is where we're looking at the numbers. Okay. Now, if I like the company, it is live on YouTube. To find it, just go to the bio somewhere. So I don't know where they are with each platform, but each one has one. It's called a bio. Give you information about me and my company, whatever. Oh, this is the last trade. This is live on YouTube, the 10-minute trade. Now, a covered call is 2 separate things. You're buying a stock, you're selling an option. To make a complete covered call, you buy the stock, means you own it. Then you can sell it to someone else using a covered call. Buy right, whatever you want to call it. But it's one of the easiest, safest strategies there is. Because when you own the stock, well, it's yours. You have the control of it. Now, the one thing I like about options and I dislike about options, 80% of all options expire worthless. Well, I like that, and I also dislike it. Now, I like it because I sell options. So in that case, I'm on the 80% side. Every once in a while, I have to buy an option, so I'm on the 20% side. Here's the thing. $190.83 per share. Okay? I can sell the 190s. I can move this over so I can see it better. So if I buy it at 190.83, I can sell it at 190 and pick up $4.85. Well, you might be asking, why would you sell it for less? I'm selling it for less so that I can get $4.85. Because if you take the 190 sales price and you add the 4, now I'm getting 194.85. Well, remember I bought it for 190.83. Well, now I'm selling it for 190 plus the 485. That's 190. 194.85. Well, that's a lot more. But the stock doesn't have. That's what it means. So let's figure out and see if there's a good one. Because remember, the numbers work great. The numbers work great. So now we're going to get the chart and see what that's actually telling. Because every picture tells a story. Be able to make it through. Oh, don't think it's no fun. A year ago, we're at 167. We bottomed out in the middle of November. That was 163.67. That's the bottom for the year. Now, the top of the year was 214.99. Well, from there, big drop. Now, can you imagine buying it at 218 and a couple of weeks later having it be at 165? Number one, you shouldn't have bought it at the top. Okay, never buy at the top. Okay, number two, here's the bottom. And then you go back. The idea of where do I think it's going next? Because think about it. Today's Thursday. Tomorrow's Friday. Those options expiring tomorrow. These ones right here, 1 August 25, that's next Friday. 8 August, that's 2 Fridays away. 15 August, that's 3 Fridays away, so on and so forth. Every Friday, one expires. So I keep rolling my orders and I keep selling covered calls every week to get a nice 1% every single week. Why not? It's there for the taking. All right, so AbbVie, we can clearly see 30 days ago, we're at 185. Okay, we drop down here. There's the bottom. So 2 days to the upside, and then the third day here. Well, this is where I should have jumped in this morning. But I didn't see this morning because today's Thursday. I usually don't buy stocks on Thursday. I usually do all my buying on Monday and Tuesday. Because if you look at it this way, if I'm doing weekly options, where am I going to get the most amount of value? Well, for a whole week. And that's Monday morning. All right, let's try it one more time. My stomach is getting queasy, you guys. I might not be able to make it the whole night. Let's see what we can do. Alacran. What's going on, Alacran? Okay, go retire. Thank you. All right, so that being said, this is where I want to jump in. And like I said, let's do one at 190. So you can see what a covered call looks like on a good quality stock. AbbVie. Now, AbbVie is a dividend king, which means they've increased their dividends for more than 5 decades. So let's see what it looks like. Let's get rid of this. Let's to the covered call. And I want to do the 190 right there. I want this thing to fill first thing in the morning. Here's what it sounds like. Buy one covered call, AbbVie, 100. That's the weekly. 1 August 20. Next Friday on the 1st. Open starter, didn't repeat. Okay, that being said, return's going to be, I've got to take that profit and divide it. Let's get my calculator. Okay, that's the maximum profit right there. Track 414. Okay, so 18th of 2.2% for 1 week. Now, if 1% a week is 50% per year, come on, you know your math. 2% a week, well, that's over 100% per year. Can you imagine doubling your money every year? What it is you want to do, what you have to work with, what trading strategy helps you get there quickest and the safest. Well, for me, it's the covered call. It's simple, it's safe, it's predictable. See, I know exactly what I'm going to make before I even do this trade. Okay, so I take that and I divide it by this and I figure out what is my rate of return. Well, on this particular trade, it's 2.2%. Well, I like to. Does it make sense? The second one is, do I like AbbVie? All right, come on. Logical question. And then fourth question, am I willing to buy this? Hold it until it hits my target. Well, what's my target? Well, so if I buy it tomorrow, 190.83, I sell it, buy it from me at 480, whatever, onto it, and continuously sell covered calls every single week until it hits your target. Because you got to keep in mind, even though it's 190.83 now, back around again, that's a chance you got to take. Even though, all right, let's go back to the chart. Up goes with 30-day top. You got your profit, and now we're back down to here. And we have 1, 2, 3 days to the upside. Now, can it keep going up? Well, normally it does, because up, down, up, down, up. It's in an upward trend at the moment. Could it stop and go down tomorrow? Yes, it could. That's the risk of playing this game. Never buy something you don't want to hold on to. That's rule number 1. All right, so let's see what else we got. Nope. AM. Now remember how I said rule number 4 was weekly options only? This is a monthly optionable stock. 15 August, 19 September, 19 December, 16 January, so on and so forth. Those are months of the year. The numbers just don't work for me. And trying to guess where the stock is going to be in 30 days, yeah, that doesn't work for me either. 5 days is hard enough. You want me to figure out 30 days from today? Yeah, no, that ain't going to work. Okay, JK Life, great info. RT, thank you. Paula, good evening. Kyle, cool stuff by Jake. Jojo, Stick to the stocks, James. No politics. Hey, I'm going to agree with you. Somebody brought it up. I forget who it was. Seabiscuit. I want to take the dividend. I want to get in 2 weeks before the dividend, grab my 1 or 2%, and then get out. Gen XJ, ULTY weekly dividends this week. Love it. All right, Gen XJ. Now, Gen XJ, you know why I don't like ULTY. They've not been around for long. To get started, do you have to register online, or do you have to talk to someone at a company? There's Acorn, Webull, Robinhood. There's a few other ones. And then you have the other ones. You got Fidelity. You got E-Trade. Oh, crap. It's going to be a long night. Spencer! I've been selling put options and making 1% a week for the last couple of years on leveraged price, or do you base it off the roll-on? I like to base it on the original purchase price. I don't always get it, but I try to get as much as I can without putting too much risk on the table. McRicken, there's no resistance. A lot of different stocks at once. All right, user 2530073614353. I can't tell you that one. What to do with your money, because I know nothing about you. TikTok's on me. Hope you're feeling better. Not 100%, but I'm getting there. When is Texas Instruments dividends? There it is. July is the dividend for Texas Instruments. And it is 136. So it's next week. It's $1.36. Uh-oh. Missed those. Mindy wants to take a look at UPS. UPS. The ups dudes. Oh, ready? Here we go. High, low, was, is, up, down, up. Okay. Is what it is. It's at 253. So, I got to change that back. $102.53. So the 103s are going for stock is over 3% for 1 week. All right, well, let's take a deeper look. Okay, a year ago, we're at 125.80. The high of the year was 144. But from 90.44, the bottom of the year, it's a nice upward trend. So we had a high pullback. Now she's going back up again. Last 30 days. This is last 30 days. Up, down, up. Well, the high is way up here, a little over 106. But today pulled back a little bit. Your 30-day bottom was last Wednesday, Thursday, Friday. Oh, crap. Tell you, getting old ain't any fun. All right, here's the bottom here. 1 day up, 2 day up, 3 day up, right there. That's when I should have jumped. Wednesday, higher, and then Thursday, a little bit of a pullback. So what does that mean? It's a gamble at this point, because you have your bottom here, your 2 days up. Here's the third day, and then yesterday, and then today. Today was a pullback. So what's going to happen tomorrow? Do I want to jump in, take that risk, or from the high here to the bottom here, and then 4 days up? If you buy over here, you sell at the high, and then as she drops, you buy it again, and then she goes back up again. When do you get rid of it? It's very important. It's a put, not a call, selling 150. John, I appreciate the input. I really do. Okay? I don't discuss puts. The only thing I'm discussing here is covered calls. They're simple, they're easy, they're predictable. When you're talking about selling puts, it's a whole giveaway one trading strategy. And the one trading strategy I give away for free. I'm not asking anyone to buy anything. We all know how the game works. You go in the bio, yeah, I got stuff to sell. I've written 14 books. I got that home study course. I get the paid morning trading group. I got all that crap. I'm not trying to sell you anything. I'm giving you information. how I taught my 9-year-old daughter to make 1% every single week. And I'm giving it to you for free. Now, if begun to, interesting. NNE. What the heck is NNE? Here's the thing. Take a look at this. April, here we are today. The low here is 18. Back. Well, what's going on now? Well, here, pulled back. Now we're up 2 days from the bottom. Well, let's zoom in a little closer. Low 40. She dropped down, jumped up, dropped down again. Now she's going back up again. Well, what does that mean? Is that something to decide? Do I like this company? Am I willing to buy it and hold on to it? Well, me personally, I've never heard of it. So for me, it's going to be a no because I've never heard of it. Now we could. Oh, damn it. Human silly. Okay, so nuclear energy, find out information that's not available on your trading platform. So the information I'm looking for is not on the trading platform. So yeah, finance, historical data. Historical data is what you call the data chain. Every bit of information you want to know about nuclear energy. I want to go to historical prices, only because I want to see if this company is consistently profitable. Have the ability. They do. I don't want to read that stuff. Well, here's what it's telling me: there are no dividends on this company. That's why I've never heard of them. Probably why I never heard of them. So if it doesn't have a dividend, well, how do I know when it's going to move? Because a dividend pays out a dividend every year. This January, February, quarter, May, June, August, September, October, November, December. Currently in the third quarter. Research. I don't want. I'm a lazy trader, really. I am. For 9-year-olds, it's not predictable. So why do I want to complicate it? Is exactly because it's trying to set within. Do you, as an investor, to work alone, or do you find it better? I would to try the weekly options, but do you have a suggestion on a safe stock to try? Nettie, unfortunately, this is the part where I say I don't give advice on stocks. Okay? Jojo does. Oh, crap. CEX. Up, down, down, up. So we're right here. 3 days at the top. Who do we got? Hello, hello. I hear someone. Okay, EJ had some noise in the background. All right. Sorry, EJ had some noise in the background. If you guys have a question over on the Zoom call, just unmute yourself and ask. I'm going to let you know now, I'm not going to make it much longer. The demon inside is awakened and is not going to let me continue. All right, so let's see what else we can do. So Chevron, here we go. So I'm going to say no to Chevron because you have resistance right here. Somebody pointed that out earlier. It's the 30-day high, up, down, up, hits it once, hits it twice, hits it a third time. If it was worth more than 156, it would have went up to 156 the 3 times it tried. I don't buy at the high. So Chevron, I'm going to say no. PWR, what the heck is PWR? PWR. Quanta Services. No. Again, why the hell would I buy anything at the high of the year? And it's a monthly. No and hell no. That's a no. Sorry, PWR. Ellie, good evening. Rag. I think it was just stomach flu. And it's still, after the 4th time you throw up, the 5th, 6th, and 7th, there's nothing in there. Nothing left to come out. So your stomach tries to reach stuff into the intestines and starts pulling it all up. Throw that up. There's nothing left. Nothing left to throw up. So I've eaten like a sandwich in 2 days. That's it. That's the only thing I've eaten. A couple pieces of watermelon. Sandwich, a couple pieces of watermelon. And then some water with honey. That's it. Don't get sick. It sucks. Austin, how are you today? Black Dynamite wants to take a look at Dow. Now, Dow looked great beginning of the week also. So yeah, I did jump into some Dow also. Let's take a look. And Dow did the same thing. Great. I bought it on Monday. Doesn't make me a happy camper. Let's take a look. Okay. And then that was last Wednesday. Thursday higher. And then Monday she opened up higher than she closed on Friday. So that's my cue to jump in. So I jumped in on Monday. And then Tuesday high. And then today, big drop. Okay. Something like 28. Is that right? 28.50. Something like that. And I sold the 28.50. I got 3% on Dow this week. So I have no intent. If I bought it at 28, and most likely next week, I'm going to bring in something. It might not be 1%. Damn it. All right, let's take us to at least 10 o'clock. At least that way I can put in for 20 years. It's going to be a no right off the bat. Jojo, Exxon. XOM. Jojo, you got a couple of good ones so far. Ooh, another good one, Jojo. High, low is, look at this. Up, down, up, down, up, down, up. 110. The 110 is going for 230. That's, do I like this company? Am I willing to hold on to it? Well, think about it. Even if you get 0.5% every week, you don't have to get a whole percent. 0.5% every week is 26% per year. Because simple rules. Number one, never buy something not on the list. So make sure when you're making a list, make sure it's companies you have a desire to hold on to. Don't hold on to them forever. Buy them when they drop. Okay, when they go up, take the small profit. You eat an elephant one bite at a time. Don't try to, if you're looking to buy something and have it shooting up to the moon and be rich overnight, that ain't going to happen. Not here. Because it's the same stocks over and over and over again. Doing the same thing changes. Your perspective on life changes. You wake up in the morning with aches and pains you didn't have in your 20s and 30s and 40s and 50s. They just show up out of nowhere. It's like, oh yeah, I remember where that one came from. It does. Anyway, the year in the beginning of October at 1. Now the bottom was the first week of April. That's when we had that big pullback in April. 97.85. She shoots back up again. Okay, here's our 30-day high right here. Okay, 30-day high. The profit taken brings it down to here. Then some more escalation. Okay, it gets a certain point when you go from here 107 to 116. That's a $29. That's a $29 increase. That's over 18%. Yeah, there's going to be profit taken. I'm going to go lay down before I yak again. Sorry. I know someone's out there, some sick, twisted guys out there say, serves you right. Look at him. The old man's getting sick. Yep, I am. All right, so looking at the see that. Let's go. At the market, here we go. buy one covered call, ExxonMobil 100, that's the weekly, 1 August 25. That means it's expiring next Friday. Okay. Contract. Well, what's it costing me? Get that calculator out again. 178 is the profit. I'm going to divide that by the investment. The investment, 1,900 and 922. That's 1.6. 1.6%. It's got to be at least 8%. Find out. It has weekly options available. And that's why I only invest in companies that have weekly options. At first, I stayed away from them because I didn't know. I didn't understand them. Well, they're not that difficult. If I'm buying it at 110.79 and I'm agreeing to sell it at 111, and to agree to sell it at 111, someone's going to pay me $107 that I paid for it. Now, granted, that's not a huge profit, but I'm getting 21 cents here. If I buy it at 110.79 and I sell it at 111, well, that's 21 cents. Plus, I get to pick up another 178 per contract. That works for me. That makes sense. Now, I'm apologizing. I wasn't here last night because I was sick. Tonight, I've tried. I made an hour. Okay, I want to apologize. Now, tomorrow does start the weekend because I don't do Friday nights and I don't do Saturday nights. That being said, I'm going to get going. I go lay down before I... Oh, yuck. Don't get sick. It's no fun. And sorry, guys. Oh, come on. It doesn't want to turn off. There we go.